Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into company filings and uncover the hidden stories behind the numbers. And boy, do we have a story for you today. It's got mergers, new leadership, and a whole lot of stock activity. So grab your coffee and let's get to decoding. So what's happening here is essentially a big change for a company formerly known as Asset Entities Inc. They've officially changed their name to Strive Inc. And this report is all about the completion of a major deal called the merger. Think of it like one company buying another, but in this case, it's more the combination that's really shaking things up. This report tells us about some big events that happened right around September 2025. The most important part is that the company, which was Strive Inc. and is now officially our Strive Inc., basically merged with another company called Strive Enterprises. This means the old Strive Inc. is now the parent company and Strive Enterprises is now a part of it. Let's talk about who's running the show now. After the merger, there was a big shake-up in the leadership. Many of the old directors and officers stepped down. So you see here, a whole bunch of directors resigned. That's a pretty common thing after a big merger like this. New owners, new management. And here's the new crew that stepped in as directors. We've got Matthew Cole as the new Chief Executive Officer, Benjamin Pham as the Chief Financial Officer, and Logan Ben as the Chief Legal Officer. It seems like they're bringing in fresh faces to lead the combined company. Looking at some of these new directors like Pierre Rochard, they have some really interesting backgrounds. He's been involved with Bitcoin companies and has a lot of experience in the digital asset and financial tech space. This often tells us where the company is aiming to go. Shirish Jajodia also has a strong background in corporate treasury and investor relations, especially with digital assets like Bitcoin. This is definitely a sign that the company is very focused on finance and might be holding a lot of Bitcoin or similar assets. But James Lavish comes from a Bitcoin opportunity fund, so you can see a clear theme emerging here. A strong focus on Bitcoin and digital assets. Then you have someone like Jonathan Macy from Yale, who brings a ton of expertise in corporate law and governance. Having professors and experts on the board adds a layer of strong oversight, which is crucial, especially when you're dealing with new technologies and regulations. And Mahesh Ramakrishnan is from a venture capital firm focused on blockchain. This really reinforces the idea that Strive Inc. is positioning itself as a tech-forward, possibly crypto-centric company. Now let's talk about how this whole merger and rebirth was paid for. They did something called a PIPE financing. PIPE stands for Private Investment in Public Equity. Basically, they sold a bunch of new company shares directly to some investors to raise money. This looks like a pretty big deal. They raised about $750 million by selling shares, plus these things called warrants. Warrants are like options, giving people the right to buy more shares later, often at a set price. So they got a lot of cash, but also created more shares that could be bought in the future. This is a common way for companies to get funding, but it can dilute the value of existing shares if not managed carefully. These pre-funded warrants are interesting. They have a super low exercise price, almost nothing, and can be used right away. But there's a catch. You can't own more than 929% of the company's shares if you exercise these. This is a way to prevent any single investor from taking too much control too quickly. The traditional warrants have a slightly higher price, $135.35 per share, and they expire in a year. They also have that 9.99% ownership, strongly suggests they want to avoid any one person or group getting too much control. And here's something really unique. They also did something called a 351 exchange. It sounds technical, but it means they issued over 2.6 million shares of their new stock in exchange for 69 Bitcoin. Yes, you heard that right. They traded shares for actual Bitcoin. This is a very strong signal about their strategy. Remember how we talked about the company's old ways? Well, they've officially ended a sales agreement that was in place with AG Pet Alliance Global Partners. This was a plan to sell shares of their older stock. Since they've gone through this big merger and rebranding, that old agreement is no longer needed. This part is that how the rights of people who own the company's stock have changed. They basically restated their articles of incorporation and bylaws. This is where they reclassified their old shares, changing what they call Class A and Class B common stock into new Class A and Class B common stock into new Class A and Class B common stock into new Class A and Class B common stock into new Class A and Class B common stock into new Class A and Class B common stock. They've also set rules for how the company will be run going forward. For example, to change certain important company documents, you'll need a majority vote from the people who hold the company's stock. And they've put in place protections against unwanted takeovers, following Nevada's laws when it comes to dealing with large shareholders. This is where we see the real impact of the merger. after all was said and done, the original Strive security holders ended up owning more than 94% of the company. This means the merger indeed resulted in a change of control. It's not just a name change, it's a whole new ownership structure. And with this new ownership, they've entered into a shareholders agreement. This agreement gives certain major shareholders called controlling shareholders significant power. They can nominate a majority of the company's board of directors, and their approval is needed for major changes. This tells us that a specific group of people will have a very strong say in how Strive Inc. operates. Right now, these controlling shareholders hold the majority of the voting power. This also means that Strive Inc. is considered a controlled company by NASDAQ standards. This status usually allows companies to be exempt from certain board independence rules, but it's a strong indicator of concentrated ownership and control. This section details the compensation and new roles for some of the key people. We already saw the new directors coming in, but here we see who's officially in charge of what. So, Matthew Cole is the CEO, Benjamin Pham is CFO, Logan Bunn is Chief Legal Officer, and Asha Sarkany is Chief Marketing Officer. These are the top executives leading the new Strive Inc. And some of the new directors have been put on important committees like compensation, audit, and nominating and corporate governance. This shows they are immediately integrating the new team into the company's core functions. It also mentions some payments. The former top executives like the CEO and CFO received cash bonuses, and it looks like Matthew Cole, the new CEO, had his restricted stock units, which are like future stock awards, fully vested immediately. This is a pretty common way to incentivize and retain new leadership. And for those who left, like Matthew Kruger and Michael Galbert, they have separation agreements. This typically means they get a payout and agree to not sue the company or say bad things about it. For example, Mr. Kruger got a $100 $80,000 payout and extended health insurance, and Mr. Galbert got $240,000. It's part of the clean break after the merger. Finally, we have the list of all the documents and exhibits that support this report. This is where you'd find the actual detailed financial statements, pro forma information, which is like hypothetical financials showing what the company would look like after the merger. So what's the big takeaway here? Strive Inc., formerly Asset Entities Inc., has gone through a massive transformation. They've merged with Strive Enterprises, rebranded, brought in a new leadership team with a clear focus on digital assets and Bitcoin, and raised significant capital through a PIPE offering. The formation of the shareholders agreement and the designation as a controlled company indicate that a core group of investors will have substantial influence. The extensive use of new stock and warrants, coupled with the exchange of shares for Bitcoin, paints a picture of a company aggressively positioning itself in a rapidly evolving financial landscape. The company's direction appears to be heavily influenced by the digital asset space, particularly Bitcoin. This is a high-growth, high-risk area. The new leadership team seems experienced in this niche, which is a strength. However, the significant dilution from the PIPE financing and the future exercise of warrants could pose challenges, potentially impacting existing shareholder value if not managed effectively. The concentrated control through the shareholders agreement is also something to watch. It can lead to decisive action, but also potential conflicts if minority shareholders' interests aren't considered. Overall, Strive Inc. is charting a bold course. The success will likely depend on how well they navigate the volatility of the digital asset market, execute their strategic vision, and manage their shareholder structure. It's a company to keep a close eye on. What do you think of Strive Inc.'s new direction and the deals they've made? Are you excited about their focus on Bitcoin, or do you see potential risks with the new ownership structure? Let me know your thoughts in the comments below. If you found this breakdown helpful, please smash that like button and subscribe for more deep dives into corporate filings. And don't forget to join our Discord community linked in the description for more real-time discussions and insights. Thanks for watching, and I'll see you in the next one.